I just got a email from the FMCSA.
Really?
Yes, they are announcing a new hours of service pilot program for America's truck drivers. So, kind of cool. They are piloting the idea of a new policy that would allow truck drivers greater flexibility and control over scheduling. Sounds like they're going to lift some of the hours of service rules that have been in place for a while. I've heard from a lot of different motor carriers that is an aggravating thing for them. You know, you get to the
It
end of
does
your
seem,
time route and you don't have a parking space, which is another huge issue. You get to the end of your time and it's like a leash. What do? You pull over, you park on a ramp, and then you get a ticket because you can't park on a ramp, all those different things. So, yeah, that'll be interesting to see what happens.
yeah, interesting. All right. Well, a couple of topics we want to cover today. So we want to look at, first topic, a few new insurers in the marketplace, ones that have come up in conversation recently. So we want to look at a few of those. It's always kind of fun to see who the new players are and what impact they're making. And then we always like to share market updates. So the second thing we have to cover is a key update to the market, kind of a big splash, relative or relevant information to share. So shall we do our intro and then jump into it?
Yeah, let's kick it off here. So, welcome.
All right.
Welcome to the podcast that accompanies the DOT Analysis platform, where we discuss real-time trends in the truck insurance market and explore answers to the questions you are not allowed to ask. I'm Ray.
And I'm Ben. And this is the Inside Lane.
All right. Get my cup of coffee here. Always start a morning with a cup of coffee.
Got to do it. I love coffee. It's great.
I know.
How do people live without it? Like the people that hate coffee?
Yeah.
Are those people, should they be on a watch list, do you think?
Well, don't worry, because they'll soon be converted. We have a guy on our team who, for several years, swore to me up and down, he'll never drink coffee. Then his wife got pregnant, and I said, hey, when she has a baby, and you are now a young father, you will drink coffee. Mark my words.
Yeah.
What does he drink every day now? Coffee. So, yeah. If you're not in it yet, you will be.
I think that's what you call coming face to face with reality.
That's right. That's right.
Kids have a way of bringing you face to face with reality.
That is very true. Well, you haven't had any good funnies lately. No good jokes. No good stories. You got any?
I think most of what I say is funny, but somehow my kids seem to think the same thing as you, that nothing I say is funny.
It all depends on perspective.
Doesn't it really, though?
Yeah.
All right. Yeah, I got one for you here. Let's see what you think of this. All right. This is the classic walked into a bar joke. So let me know what you think.
Oh, good. All right.
All right. A producer, a customer service representative, and an underwriter walk into a bar. They're taking a group of clients out for drinks. The producer confidently announces, "Order what you want. I already promised free drinks for everyone." The underwriter replies, "Not so fast. Before approving that, I'm going to need 3 years of bar receipts, a blood alcohol history on everyone, and confirmation that this establishment has a code-compliant fire suppression system. In the meantime, I'll get a pitcher of water for the table." The producer just kicks the CSR under the table, who stammers, let me see what I can do, and hurries off after the underwriter. The producer turns back to the clients, a confident smile on his face. 20 minutes later, a disheveled CSR returns and says, Good news. I got drinks approved. However, it does exclude ice, garnish, and refills. Also, nothing after happy hour is covered." The agent turns to the customers and says proudly, "See, I told you I'd take care of it."
The only thing inaccurate about that story is I thought it would have been 5 years of receipts and not 3. Oh, that's great.
Yeah. Gosh, the poor CSRs though, don't they deserve like a special day. Is there a CSR day? Because it feels like there should be.
If there's not, there absolutely should be, because I have, I was going to say, I feel like this is the case, but I know this is the case because I constantly talk to users of our software who are CSRs,
Right.
and they just get caught in the middle, man. You have the agent over here and you have the underwriter over here. And of course, we talk to all those groups of people all the time as well. But the CSRs, they're just running, back and forth many times trying to make the impossible possible. And they do. Amazingly enough, they bridge that gap.
Right.
They are wonderful people.
Because so much of what we do and our mission is around just improving the lives at DOT Analysis, is improving the lives of truck insurance professionals, and CSRs are such rich opportunity for improving the lives of.
Yep.
Maybe we should start a National CSR Appreciation Day.
I know, that is a really good idea. I've been involved in organizations that had that celebrated the National Truck Driver Appreciation Day.
Yeah.
And this is very much in that same vein, National CSR Appreciation Day. So,
all right. Well,
there we go.
We'll have to think
Good
about
idea.
that and see if we can come up with something to do on that. All right. Well, let's jump into our topics for today and start with the new entrants to the truck insurance marketplace that we want to take a look at here today. And these are coming from conversations we've had recently here with some of our customers and contacts, and wanted to take a look at what they're doing and see how they're impacting the market. So the first one I got on my list here, we talked about this the other day, is Concert Group. I think you mentioned this one to me. I don't know a whole lot about Concert Group, to be honest.
Yeah, I ran into to them with there was a group of clients that I was talking to, and they came up because they were growing in a particular state, and their name came up. So of course we look into their book and start to peel back the different layers of it.
All right. Well, why don't we take a look at Concert Group and show me what you found here and what's interesting about them.
If I can spell concert right, there we go. All right, so here's Concert Group. They got 2 papers, and when we say new, how do you define new, right? They didn't show up last month or 6 months ago, but they showed up, 2-ish years ago, and they started writing business. And
yeah, I see they've got a little bit of 3-year-old business on their books there in the relationship duration graph.
Yeah, so you talk about some of the legacy players that are in this space, and 3 years is new. 2 years is new, so that's why we're labeling them that way. So I'm on market intelligence here in DOT Analysis. I pulled up Concert Group. They have these 2 papers. They have a total of, call it 1,900 policies, which is up by 31% in the past year, which is really cool.
Well, that's definitely not something to gloss over, because we've been covering a lot of even the big players, and a lot of them are either flat or negative over the last year. There's only a handful of companies here that are experiencing growth, let alone 30% or more. So that's significant.
So I'm gonna parse their book a little bit right off the bat here. Let's take out just the single units and let's see how that number tracks. And this is important because a lot of people, you say, hey, they've had 31% growth in the past year, and they look at a book like that and they go, well, yeah, it's probably all single units. Well, I just want to point this out. They have everything other than single unit. They're still up by 25%. So it's not just those single units that are growing their book. It is, but it's not just that.
And then quite a few of our viewers who do just listen and aren't necessarily watching this on YouTube. So just to state that number then, not only 25% growth, but they still have over 1,000 policies without that single unit. So the single unit was just under half their book of business, and then the rest of it is 2 or more units. Now,
so
very little in the fleet. So they're small fleets, and non-fleet is definitely their focus here.
Yeah, absolutely. And I'll point this out. One agency in particular that I was meeting with this week had actually reached out to Concert Group looking for an appointment, and got a direct response from them saying that, hey, we're all set. We've got, really great retail partners right now. We're not looking for any additional agencies to appoint right now. We're happy with our growth. And I can see that they are happy with their growth. I mean, it does make sense. That story lines up. They didn't say that as arbitrage because they're trying to get out of the market, most likely.
Yeah,
That
interesting.
lines up.
All right. Well, before we move on, then let's just do a flyover here of their book and see what's happening. I'm kind of interested in what's happening in the States. Do we want to keep the single unit out, or why don't we just look at their whole book, and then people
Sure.
can come back later if they want and drill into the specific segments. But let's see what's happening there, because I always am interested, especially when there's that much growth in a book, 31%. Why are there red states? That's always curious to me or interesting to me. So yeah, let's look at the map.
Right.
I want to see where those are located. Obviously, if it's just a couple of policies, like I see some of their states, single digits as far as number of policies. Okay, that being red or green, way less significant there.
Yeah.
But I like to see where their key states are.
Yeah, there's a couple states that I'll point out here. So take a look at this. If I just start from left to right, I see California, right? So they got a decent weighting in California.
Let me say some of the numbers as we go so we don't lose it here for our listeners. So yeah, 142 policies in California right now. They're shaded slightly red.
Yeah, what I was going to say about California is it's just interesting to see. When I went through the time filters on here, I noticed they had a whole bump up in policies in California over a short period of time, but then they kind of plateaued off. And I'm going to throw out a conjecture there. Most people are aware of the regulatory change that happened in California about a yearish, I'd say it might be a year and a half ago now, where all of those independent contractors had to be reclassified as employers themselves. And so a lot of those guys started their own authority and went out and had to get a filing themselves because they couldn't lease on to another motor carrier. So I would guess that this is painting the picture of a book that grew in California and then plateaued off because all those guys, it's not that it was really organically new business necessarily of motor carriers coming into the market. More likely what it was is all those guys who had their own trucks who couldn't operate as an independent contractor leased on a motor carrier.
I know we said let's do a quick flyover, but now I'm too intrigued. Can you just put California in the menu and let's just see how much of that, if that tracks in California, how much, oh my gosh, look at that. Your hypothesis was spot on. Look at the single unit business in California. Look at our motor carrier size graph.
Yeah, look at that. 117. That's really interesting. And hold on, I want to point this out too, because this is really fascinating. A lot of those guys, look what they did. They jumped into Concert Group and then they stayed there.
Wow. I don't think I've ever seen a relationship duration graph look like that, where that much of that overweighted portion of their book of business is in the third year?
Yeah. And here's the thing. I really wonder if it has everything to do with that regulatory change. And it may be that Concert Group had a great independent contractor program and a great independent contractor product. And suddenly when the regulatory environment changed, all they did in that case is they changed the way that they appeared in the policy. They couldn't be an independent contractor. They had to have their own authority. And so it's the duration of relationship. But yeah, really great renewals on single units. That's so cool.
Wow. Interesting. Yeah. Okay. So let's clear California back out, finish our flyover of Concert Group here. And then we got two more to look at. So I see Texas has, let's just compare that, because California and Texas, two biggest states by policy count, it looks like. Totally different pictures. California just slightly negative, basically flat as far as net policies. Texas, way up.
Yeah, huge. They're up 65% in Texas over the last year. Now, just for fun, I'm going to put that single unit filter back in just to compare between Texas and California, because we just talked about the California picture. So here's what it looks like just in Texas. That again is, sorry, I'm going to get rid of that single unit. A lot of that growth in Texas is single unit as well.
It is, but not, I mean, it was almost exclusively single unit in California. Look, 135 policies in Texas are single unit out of 337 total policies. So much more balance there in the non-fleet and small fleet.
Yep, absolutely. Yeah, way more balanced. Still a lot of single units, but way more balanced.
Okay, so while we're just on Texas,
just
stay on Texas for just a second, because of course I can see the one lost business chart. I want to see, because Texas is such a competitive market, we've been looking at them a lot recently. So I want to see who their competitors are specifically in Texas there. Wow. Can you just look at the numbers on Progressive for one loss business?
Oh my goodness. So yeah, I feel that makes me think about another conversation that we had with another agency just recently, which was they were talking about rate changes, and they were talking about how, at least the way I interpreted this, was that Progressive is trying to maybe defend their book by being a little bit more, a little less intense on raising rates to try to, maintain some of their customers. Because yeah, look at this. Concert Group took 50 from Progressive in Texas, and they only lost 10 to Progressive in Texas.
All right. So they're winning 5-1 against Progressive. Who's next on the list?
They're winning about 2-1 against Geico.
Well, 21-7. So that's 3-1 against Geico.
Well, you're better at math than me. So there we go. Yeah, you're right. Oh, that's funny. Literally a multiple of 3. So you're right.
Yeah. So overall, they're doing well. All right. Okay, let's drop Texas off. Let's just look at their one loss business overall, just to kind of get a snapshot of that picture, and then we should probably move on from Concert Group here.
Yep.
If they're not taking appointments too, I want to see who they are losing business to, because I'm curious if there's opportunities there for people to be aware of.
In Florida, not the biggest one, but I will note that it is, Georgia has a decent number of them in there, but 47% growth in Florida over the last year.
Yeah. Wow.
Let's see who their biggest competitor is there. I'm just gonna throw this in there. We'll just check and see. So I'm gonna filter by just Florida here. Wow, way more evenly spread.
Yeah. Not nearly as competitive a market, obviously, as Texas is. So they're growing well, but it is more spread out. They're not taking as much focused or concentrated business from
They're not taking it from a specific competitor in bulk, like they were in Texas.
All right. I noticed one thing, if you clear the state filter out, that I want to point out here.
Yep.
Because we have been looking at, and we did recently in a few of these episodes, we've looked at some of the other market players who are just taking business from Accredited, and I saw Accredited show up in the lost business to Concert Group here. So go down to the Concert Group. Are they taking business from Accredited? Oh, yeah,
they are.
Second in the list.
Accredited. It appears as though Accredited is really having a hard time.
Yeah. Can you before we, do you have anything else you want to look at here? Otherwise, I want to just peek at Accredited.
Not with Concert Group. I think that's a good flyover of Concert Group. It's a newer entrant in the insurance market here for trucking, and it's always great to get a perspective of that, because if you're out there competing against them or you're trying to place business with them, it's good to know what they are doing. So yeah, that's a good flyover with Concert Group. Did you want to open up Accredited and see what's going on?
Just peek at Accredited before we move on. I just want to see the damage.
All right, let's see here. So we got 3 writing papers. Oh boy.
My gosh.
Yeah, so for those of you who are not listening or who are just listening and you're not looking at this on YouTube, Accredited is down 36% over the past year.
They are bleeding from the gills, Ray.
Yeah, they are. And if you look at their renewal rate, it is like a bottomless bucket.
The word abysmal comes to mind.
Yeah, that's really rough. I will point out, though, that there's some green states in here. So,
yeah, but look at those number of policies. We're at single digit.
Yeah,
like Texas, a key market. Just hover over that. What loss percentage do we have in Texas?
Oh my gosh, 73%
in Texas over the last year, down. I mean, if you're looking for business to move, I don't know what's going. We need to do a deep dive on what's going on with Accredited here, because this is crazy.
If you're a producer or you're an agent in Texas, there's a lot of opportunity in Accredited's book. If you're an underwriter,
or you're underwriting against Accredited,
yeah, as I was just going to say, if you're an underwriter and you are underwriting against them, and you're coming head to head, and you're wondering, is Accredited going to try to hold on to this? Well, they might try to hold on to it, but their fingers are slipping off that. 73% of the time.
Okay, so maybe we'll come back to Accredited in a future podcast here and take a look.
Yeah.
But let's move on with our new
Hold
market
on.
players here. Oh, all right.
Let me just point
You're
one more thing, just because I accidentally moused over Florida, and I noticed that. Look at the percentage that Accredited is down in Florida over the past year. 94%.
Okay, so what does that mean for numbers? They are down how many policies there?
1,015.
They shed 1,015 policies in the last year.
Yeah, and let's
And
just
so
see where
how
they
many are
went
left?
to.
How many are left there?
Well, they
was
have
that
63 left.
63 left. Oh my
Look,
word!
and they went everywhere. Look at this. Of those
Clear
1,000
Blue.
policies, Clear Blue took 108, Northland took 85, Canal took 71, Berkeley took 58, Sutton Specialty 57, Brooklyn Specialty 57, Progressive took 56. I could go on, but it's going all over the place. It's not like it's just moving to it. It's going everywhere.
Yeah, like I said, bleeding from the gills.
Yeah, it would be.
Yikes!
It would be real fun to talk to someone over at Accredited to see what's going on there. I mean, that makes me ask the question, are they just pulling out? Are they done? Did they get smashed in some way that we can't see? I don't know.
The only thing that's kind of bizarre is the fact that they're still writing some new business. So they haven't just stopped writing business, but I don't know how you explain the renewal rate and the declines.
Well, because you said that, if I just switch this back to their entire book and I look at new business, you're right. They are writing some new business. So it's not like they just unplugged the new business machine, because they are adding things to it.
Their amount of new business is way down on a year-to-year basis.
Correct.
But they still have, they have 3,600 new business policies this year?
Yeah. Amazing. So there's still stuff that's going on.
Yeah. Okay. All right, shall we move on?
Yep, let's do it.
All right, so the next one I've got here, this is a very new one relative to Concert Group even, but Emerald Bay.
Oh, yeah.
Familiar with the Emerald Bay paper?
I've seen it around, and I've talked to some folks who are more familiar with it than I am. But yeah, look at that. It is a definitely new program. Look at that. So we have 68% of the motor carriers in Emerald Bay are first year. 32% of them are in their second year. Yeah, it is definitely a new program that's out there, and it is very regionally focused.
Yeah, it looks like just in the Midwest there, primarily.
Here's
one policy in Oklahoma.
Here's something to point out. If you look at the safety complexion of the book, it's got a lot of red ISS.
Oh, interesting. Yeah, over 50% red ISS.
Right. So it's got a lot of what I would call hairy business in it. Look, 48% of those guys have hours of service alerts. So
interesting.
There is a decent number of hairy accounts in there. But I'll point this out as well. Look at their renewal rate on the first year. So
really solid.
Yeah, not a ton has gotten to that first renewal yet, but of those that did, that's a good renewal rate.
Yeah, so we're at 70%, just to make sure we state it. Now,
yes.
They have 44 total policies right now. So we're looking at definitely small numbers. Be careful what you do with percentages with that small numbers.
Correct.
But that definitely is interesting, because we've seen the outliers often are on the other side of that spectrum. It's very low numbers, not high. So that is interesting. I want to point out just a couple other things that stand out to me when you first loaded up the screen. One is the unit count, oftentimes very overweighted in single unit or small unit count. But look at this. The majority of their book is in that 10 to 49 units. So they are looking for those nice fleets.
Yeah,
the cool. Smaller size fleets.
They even have a couple fleets that are bigger than that. So this is a program that appears to be great for a bit of hairier accounts that are decent sized fleets. So that's really cool.
And then the other thing that I notice here, it looks like their business is quite regional. Most of their policies are located in the Midwest, but look at the radius.
Yeah,
almost their entire book is that 1,000+ radius. So even though they're local, they're not looking just for people operating in that area. They're looking for nationwide haulers, but domiciled in that Midwest region appears to be what
right.
their appetite is.
Yep. Very cool. Really cool to be able to see that. And you can
And
see where they're
it
taking
looks
it
like,
from.
yeah, it looks like they're pretty diversified as well. No key market there necessarily.
Yeah, they took a couple from Canal, they took a couple from Spinnaker, a couple from Great West. I mean, they've gotten from a bunch of different places. So they've
Yeah,
also lost
interesting.
a couple different places as well. So it's not a there's no kind of focus in or out. It's more of a broad gathering here. That's really cool.
Yeah, it'd be interesting to learn how aggressive their appetite is and how much they're looking for new submissions or how selective they are. I mean, it does appear just based on the number of policies that maybe they're being fairly selective, but maybe also it's that their distribution is just not very large yet.
Right. Yeah. Yeah. They're early on.
I
They're
think
definitely early on.
I know some people have mentioned that they're writing through Great Lakes General Agency. Do you know if anybody else is writing on this paper, or is it just Great Lakes?
I'm pretty sure it's just them. I do not believe that there's anyone else writing on that. So that would be, I
Okay.
believe it is an exclusive program to them.
Okay. So if agencies are interested, they'd try and do that through Great
Yep.
Lakes General Agency.
Yeah. And the fact that they have a decent first year renewal, I mean, that's great. That's some good underwriting then. That's very cool.
Yeah. Okay. The third one that I got on my list here, unless you've got something else you want to look at, is one we've actually looked at a couple of times, but we just have to look at them again, is Corgi.
Oh,
Now,
yeah.
they're not only new in the space, but they're an insurtech. A couple weeks ago, we did an episode on insurtechs and we covered Corgi in that episode. Now, they were like brand new on the market then, basically 30 days. So they've
Right.
had I think about a month more time in the market now. I want to say I didn't go back and check that episode.
How many policies did they have back then?
I think it was like 40 or 60 policies. I'd have to go
Yeah,
back
it was
and
low. It was something like that. I was going to say like 45 or something. I can't remember. We'd have to go back and check, but it was something in
so
the 40 to 60 range.
yeah, so pull their book up now. I mean, I looked at it the other day, but it is just tremendous what
Yeah, what's Corgi written on again?
that's a carrier guard paper.
Yeah, that's right. All right, so let's carrier guard. Here we go. And they are in RRG.
Mm-hmm.
Whoa, 270.
Yeah.
That's
Now,
really cool.
yeah. Now we did note that oftentimes that's heavy in single unit. That was one of the things we pointed out about
It
Emerald
is.
Bay being different. So this is true to that. You see the majority of their business is single unit
Yep.
and then a little bit of non-fleet and just a handful of fleet so far.
Right. So a lot of single unit that's in here. They don't have a single renewal yet because this is so new.
Yeah, in fact, just verify that. If we go to 90 days ago, the as of 90 days ago, I believe they have nothing on this paper.
Yeah,
zero policies.
Nothing.
So literally,
Yeah, we are real new.
This is actually brand new market entrant here.
Yeah. Yeah.
So the other thing, if we look at those states, Ray, before when we had like the 45 policies, it was tough to tell where they were interested. Now you're starting to see where their appetite is really located.
Yeah.
So California, 127 policies. Texas, 29 policies. And then is that Georgia at 22?
Yep. And then up in Illinois.
Yep.
Yeah, that is really cool. That it's good to see exactly where their footprint is. And actually, one of the things I'll point out, and you will have heard this if you went through our risk retention group episode, but the reason that they are able to shotgun out like that in all of these different states is because they're going under the regulatory apparatus of the risk retention group. So that is a characteristic of the risk retention groups that they can launch like this in so many different states because that is what they are. So interesting to see. It'll be fun to see if they pop into some of these other states. I assume that they will, but we will see that materialize. We can see where they're taking business, which is fun.
Yeah, notice who's number 2 in the list.
Oh no, Accredited again. They keep popping up and in all the wrong places too.
Yep.
Yeah, Progressive.
Okay, so a few other things that stand out to me here. books that are heavy in single unit business tend to be lower in red ISS because most of those
Yeah,
single
that stood
unit
out.
carriers don't have the ISS score. They don't have enough data for the FMCSA to rank them.
That stood
But
out to me
what
too.
percentage do they still have in the overall book there?
They have 12% red ISS.
12%. Let's
Let me
take
just
just the single unit business out because they don't have many fleets, but I'm just curious if all we do is take single unit out, what that
Okay.
jumps to. Because it does seem to be a little concerning, the type of business they're writing.
23%.
Let's
go the
only single
opposite
unit taken
way
out.
because then I want to peel back for our listeners on understanding that ISS a second. So
Yeah.
look at that. Okay, so this is really interesting. 7%. I know that. Let's put it into context because
Yeah.
this 7% red ISS is more meaningful to me than the higher percentage red ISS I saw on the larger fleet count. And here's why. Because in order to have an ISS score actually even calculated by the FMCSA, in order for the government to give you an ISS score, you have to have enough data available to them to do a calculation. And that's for good reason. They don't want to miscalculate a score. Because if you got one truck, I mean, how many times do they inspect you? If you got one truck, how many times?
Right.
It's difficult to collect enough information on a single unit motor carrier to have.
Which is why so many single units don't have a rating.
Correct. Right. But amazingly, 7% of the single unit motor carriers in this book of business have red ISS. That is a worrisome, from my perspective, characteristic of this book of business.
Yeah, it certainly gives reason for pause, I would say.
Yes.
Because the question is that intentional and they know what they're doing? Or are they so hungry for business, they're not looking closely at the business they're writing? That would be the question I have.
Yeah, that is a really good question to ask. Yeah.
Now, you said to put that in context, so I'm just curious. Leave the one unit filter on, pick any other insurance company out there with the single unit, and let's look at what percentage of red ISS somebody else has for single unit.
Well, let's just throw in here
Great West,
a really great quality underwriting group, Great West. And let's look at that. Oh, man, amazing. Look at that. Red ISS is 0%.
For Great. So just to clarify, Great West, single unit business only. The percentage of red ISS is 0%.
Correct. That is.
And only 1% yellow.
Right. And the rest is either green or this category that's called insufficient, meaning they have insufficient data for the FMCSA to calculate a score for them because they're.
Okay. So everybody knows Great West writes pretty clean business. Let's say that's off. The Corgi were taking the most from Progressive, I think it was. So let's see what Progressive looks like for single unit.
All right. So Progressive single unit. This is going to be out of 60,000 motor carriers, because that's how many single units Progressive has right now. Even they have only 1% red ISS.
1% red, 1% yellow. So once again, essentially only green or that insufficient data category. So that gives some context for just how significant Corgi is on that red ISS category. The fact that that's 7% red and then 2% yellow. So almost 10% of even their single unit business is either yellow or red ISS.
That is, I would say, a worrisome thing. It just simply is.
But it does also mean for motor carriers that fit that criteria, it looks like Corgi's interested. So you've got a market, you've got a home somewhere.
Yeah. And actually, I got all sorts of thoughts on that, but that is very true. So there is a market out there to serve everyone, which is the beauty of capitalism, right? And this might just be where someone needs to be while they repair their reputation if they're a motor carrier that struggles with that rating, that safety rating.
Yep. All right. So everything's in the last 60, 90 days here. It will be interesting as we get closer to a year past that first year to see what they do with renewals. I'm also curious to see what percentage of their book of business we see just age out of the market or go out of business, because that is motor carriers like that are suspect for whether they're even going to survive. So those will be some interesting things to continue to watch in the days ahead here.
Yep, absolutely. Very cool.
All right. So the other topic we wanted to cover is just relevant industry updates. And interesting, we ended on Corgi here. And the most interesting industry update that I have that I wanted to talk to you about here today is also related to the insurtech space. And that is, did you see the announcement of HDVI got
Oh,
acquired?
yeah. Yeah, they did. HDVI got acquired by, I believe, Federated.
Yeah. And I don't know a whole lot about it. Have you heard many people talking about that yet?
I've heard a couple comments. The day that I think the day that it happened, I heard from a couple different people because people wanted to suddenly look at HDVI's book of business, and what other way do you do that than in DOT analysis? So I
Mm-hmm.
think there was a decent number of people that, based on who reached out to me at least, and I'm sure that was a topic of conversation elsewhere as well. They wanted to kind of put a mental stake in the sand to say, okay, this is where HDVI is at right now. They're getting acquired. In the announcement from Federated, they had said, or rather, in the announcement from HDVI, I remember reading something about how
I did
Federated
just send you
was.
the link if you want to throw it up on the screen here.
Oh, you did?
And
Okay, yeah.
I'll put the link to the announcement in the show notes here. So feel free to link to that if you want to read the full thing.
Yeah, high definition vehicle insurance acquired by Federated Mutual Insurance Company. Yeah, I remember reading this, and there's something in here about, the great strategic investment that this represents from Federated, and how Federated was planning on injecting some fantastic capital in to HDVI in order to grow it. So the people who had reached out, I think what they were trying to do, and really what I thought as well, is let me get a good understanding of where HDVI is at right now, because as everybody knows, you can't just instantaneously grow a trucking book, especially with someone like HDVI who's focused on fleets. I mean, there's at least 90, 120 day lead time to.
Well, Ray, when you think you can't instantly grow a trucking book, Corgi seems to think they can. I'm not sure
That's
you can
right.
instantly grow a quality trucking
Yes.
book.
All right. That is a very good point. So HDVI, I believe, is focused more on quality. And so
Yeah.
I will be interested to see what they look like in 6 months and in a year, because that's the reasonable time frame that you would be able to, at the earliest, see
Yeah.
what they're doing.
The other thing, I think back again in the InsurTech episode we recorded a few weeks ago here, we compared HDVI and Nirvana side by side, and we've been kind of tracking that for a while. It's kind of interesting how both of them coming on the scene around the same time, that Nirvana has grown about a 3 times the size book that HDVI did. And so
Yeah.
I am curious to see if this move is going to affect their appetite at all, both in the type of business they're writing and the amount of business they're writing. Are they going to try
Yeah.
and compete more head to head with Nirvana? That'll be interesting to watch. I wonder if they're going to target Nirvana's business, or if they will develop their own niche and target different type of business than what Nirvana is. So
Well,
we'll monitor that
we'll
over
monitor
time.
that, and we'll be able to see that in DOT analysis on the Market Intelligence and Market Explorer dashboards. That will be really fun to see that unfold.
Mm-hmm. Yeah, absolutely. All right. Well, let us know if there's a unique new market player on the insurer side that you think we should take a look at, and we'll be happy to explore that in a future episode.
All right. Until then, have a great week. We'll see you next time.